Man, you've seen the title. Investors have just lost their minds lately, man. Everybody's just so bullish right now, guys. It just don't make any sense to me. Just everybody just sentiment just gonna just flip like this guy. Everybody just think the market's just gonna rally all of a sudden. You're new around here, tickers and tokens. Like and subscribe if you enjoy the video, and just gonna get right into it. Inflation's cooling, rates are peaking. Is it time to buy stocks and bonds again? What do you think? 40-year high inflation, most aggressive interest rate hikes by the Federal Reserve since the 1980s, pummeled people's portfolios last year. Stocks and bonds, which normally move in opposite directions, plunged simultaneously, leaving the classic diversified 60-40 bond, 60-40 as I call it, yeah, in shambles, and investors with nowhere to hide. Well, I mean, they can hide in cash. That's what they've been doing all year. If you pull up like cash, like people's cash reserves and stuff, they're lower from where people, spend all the money on this inflation and stuff. But at the end of the day, like actual investors, their cash position is the largest it's been since I think 2008, if I'm not mistaken. So people's savings, like if you look at the banks, their financials will tell you that people's money, as far as savings accounts goes, yeah, it's getting wiped out. A lot of people are using their credit cards for stuff, but investors who are like preparing with cash and stuff, they're actually heavier in cash than they've ever been. So you really don't have to do this 60-40 split right now. If you can just be like most people right now, just keep some cash on the sidelines. That's what everybody else is doing. Overall, the inflation pendulum is swinging back now. Yeah. Starting to swing back. I'll say that. But yeah, everybody's acting like we're at the bottom. We done swung back the other way around. We just cut the rope, man. We're finally just getting the thing moving back in the right direction. So I just want to really stress that, guys. Like everybody's just acting like, look, like even this, a major shark attack is coming for stocks, and it will bite investors who don't realize they're in a new market cycle. That's Charles Schwab saying that. Somebody from Charles Schwab. So, Charles Schwab is a really big brokerage, guys, a big brokerage firm. So they say it's got to be true, right? And the firm warned those new market leaders and investors are unaware at risk a shark attack on their portfolio. So what I mean by shark attack is these are people who wait for stocks to be at their lowest, and then they'll just scoop in or swoop in, just buy it up. Think of like a shark in the ocean, right? They see something bleeding, dying, and they ready to swoop in and just come eat it all up. That's the same idea. Investors see a stock that's beaten down, destroyed, just ready to give in, tap out. That's when they come in and boom, flood a bunch of cash in. That's your shark attack. Even if that does happen, that doesn't necessarily mean we're in another bull run now, does it? I mean, they might do it for like one or two stocks here and there. You could argue we've already seen a little bit of that early this year. I mean, these past couple of weeks have been very, very bullish for stocks, and I just don't see much of it. I guess to go into more detail here, let's take a look at this.
This is a long recovery after being bitten by a bull shark.
Or just like an actual. What is this video? Oh, okay. It's actually referring to real shark attacks. I'm crazy, guys. I don't know what I'm talking about. But yeah, look, this is what I was telling you about. Investors are holding record levels of cash and maybe poised to snap up stocks. So we can see some bullishness short term. I definitely agree with that. It wouldn't surprise me to see stocks continue to rally for a while. People have been sitting in cash all year, guys. I know if you're anything like me and you love to just spend money on stocks, you're getting itchy just holding all that cash, man. No one who's a real investor really likes to invest in the market, likes to sit on cash. Nobody wants to sit on cash. It's just not a good. It's an asset that loses. It's not even an asset. It's a liability, really. It's something that just loses money over time. I mean, unless you're doing something to take advantage of the interest rates and stuff around here. Other than that, then you're losing money to inflation. It's just straight like that. I mean, money market accounts hold a record of 4.8 trillion, guys, in the week that ended January 4th. So since the start of the year, basically, people are just really, really into cash right now, and that's like most people's biggest position, really. I'm working on actually building up more cash as it is right now. I'll be honest with you guys. That's what the whole point of this channel is, me be honest with you and give you my honest opinion, give you my thoughts and stuff. I've been buying stocks all throughout last year. Am I down? Oh yeah, I'm down pretty. I'm down quite a bit, I'll say. But I kept buying the entire year, guys. I've been buying the entire year, and but I got to say, Like I said, nothing I say is financial advice, but I have a very long-term horizon too. I'm holding the stocks I want for 5, 10, 15, 20 years, maybe even longer. So you got to ask yourself what your time horizon is when you get into stocks. You really shouldn't be in any stocks if you're not willing to be patient and wait to see them out and see them actually grow in value. That's that's what investing is. You plant a seed and watch it grow. That's the whole point of investing. Staying a holding pattern while earning income, yeah. Everybody's like always holding cash, just hold nothing but cash. That's all you want to do. Everybody's just so bullish, but yet everybody's just holding nothing but cash. So I don't. Which is it? So they're saying we see some pockets of growth in stocks this year. So yeah, I mean, like I said, I'm expecting some more bullishness short term, but we're definitely gonna have to come back and test the lows, guys. I mean, we're already bumping the head on Bitcoin. If you look at it, it's at 21,000. It's just been hanging there, refusing to move. So let's see what they got to say. This is Jonathan Farrow. I actually like Bloomberg. So old Doomberg. Let's see what they got
So
to say.
overall, I still am fairly pessimistic on the overall outlook for equities, but I think that there's going to be pockets of growth that should outperform. And I think you're going to see more differentiation this year versus what we saw in 2022. And so specifically, I think that those names that are really geared towards Asia and the China reopening story are going to be the places that are going to outperform and where you really want to hone in on your bets. And so there are names in the U.S. that I think should do well. Some of the luxury names, specifically, geared names to international travel, and some of the hotel and leisure names should outperform. And then I even think some of the tech sector should also start to do well, particularly given the fact that duration we're now starting to see, or rates are starting to move lower. That should help to support.
Whoa! I'm gonna pause you right there. Whoa! You said rates are starting to move lower. No. I'm gonna stop you right there. Go ahead and stop you right there. We haven't seen a single rate cut yet. I'm assuming she's talking about interest rates. If not, then I'm sorry, but I'm just going to go ahead and stop this whole conversation right now. We have not seen a pause in interest rates. Never mind a cut. Never mind them lowering interest rates. So, you see some bullishness in tech stocks? Sure, because I mean they've just been destroyed this year. I mean, look at Meta. It's at like a 6-7 year low right now, ain't it? So. Do I think that Meta could be at the bottom? Absolutely. Do I know it's at the bottom? Absolutely not. So, I mean, sure, there could be some bullishness when the stock's absolutely been destroyed, like it has been. Yeah, like the way Google and Amazon, Meta, Tesla, they're all destroyed this year. So, they could be at the bottom. Maybe there could be some growth this year. Yeah, maybe growth stocks will actually do okay.
Or, those long duration.
But I think overall, the trend is saying that we're headed for a nasty recession, and they're going to get inflation back down. I'm rambling. I know I'm rambling, but this is the whole point of this video, I guess. Jerome Powell is adamant, guys. We're going to get inflation to 2%, and every single time we get one of these rate hikes, everybody just goes, "Oh, this is it. It's the last one. We're going to cut now. We're going to pause now. We're going to pivot now." We're going to cut, we're going to pause, we're going to pivot. Something bullish has got to happen, guys. We got to have some bullishness in the market. Please. Have some bullishness in the market. I'm just sick of it, guys. Like this, snap into reality. Look at me. Hey, we're in a bear market. We're in a bear market. Get over it. We're in a bear market. It's fine. If anything, again, if you're in that time horizon, you want stocks to come down. You love it when stocks are just going crazy like that's going down. I actually get excited about on red days, and that's just me. I don't look at my portfolio and think, "Oh, I'm down $20, $200, $2,000, $20,000." I'm like, "Hey, how can I get more money to buy these stocks at these generational prices?" Like this is the last time I'll ever even get this stock at this price ever. It's never going back to this price ever again. That's how I look at it. So I'm trying to grab all the shares I can. That's just my mentality.
Bets in the technology sector, and I think that you'll start to see those names do better. So anything that's really geared outside of the U.S., which have more of its sales and revenue streams from international exposure, I think are going to outperform the U.S. as it heads into the recession.
Erin, the one thing I wanted to discuss with you as well is tech. So Microsoft just come out and made its job cuts. could be in and around 5% of the
Talked about that in my
company.
video yesterday.
Guggenheim downgraded the stock yesterday, and I want to talk to you about this quote from them. They said, while most investors see this name as a large, stable business that can weather any storm, it does have vulnerabilities, some of which could be exacerbated by the macro slowdown. We are in a prolonged macro slowdown, and no one is immune.
Right. I mean, yeah, no one is immune, sure, but Microsoft's business model is doing fantastic, guys. Like their Azure cloud software, guys, it's doing amazing. It's growing up like a 20-30% clip every year, and it's compounded year over year. It's doing fantastic. I mean, sure. I mean, they hired a lot of people that, you know, a lot of these tech companies did over the last 2 years. So, yeah, we had a little overhiring. Yeah, they're gonna lay them off, and they're going to cut costs, and they're trying to go get out in front of this earnings recession that we all know is coming. They're trying to make their earnings reports look better. I'm thinking about 2024 when all this is said and done by then. I guarantee you it will be. I ain't got a crystal ball. I'm pretty sure a lot of this will be over by 2024. We'll be looking back and thinking, Microsoft's got such easy comps from 2023 and going into 2024 because all these stocks have just had terrible earnings. That goes for Microsoft, Google, Amazon, Tesla, Meta, you name it, Apple, all of them. We're looking at, you know, looking at terrible earnings for these companies, just straight up, and they're going to get better. These are great, fantastic companies. These are household names. You all know these companies. They all are dabbling in new technologies that are just have nothing but room and yards out ahead of them, guys. So.
Aaron, can you just walk me through your expectations for this recession in the United States and how it stacks up with maybe part of the equity market, part of the tech sector that is more cyclically challenged than some people might appreciate?
So I think that's right, but I think that played out through most of 2022, and you saw material underperformance of the tech names on the back of, first, a slowdown in overall demand, and secondarily, higher interest rates. And now we're starting to see that a very, much more severe slowdown is priced in the tech sector versus what we're seeing across other cyclical sectors. And in addition to that, we're now seeing duration or treasuries, stop increasing in terms of rate level, and we're starting to see them actually rally and yields go back down lower. And so I think just given the fact that a pretty severe...
That's because the market's pricing in a recession. I mean, if you're having yields go down and everything, yeah, the market's just pricing in a recession, and we're probably going to get one. I'm going to say it because nobody else seems to want to say it. The Fed is trying to force a recession. They just are, and they don't want to tell you that. I'll tell you that. The Fed is going to force a recession. They have to get this inflation down. With that, everything's going to crash, guys. Real estate, gas and oil stocks, tech stocks, healthcare stocks, defensives, you name it, they all going to crash. Everything crashes in a recession. Gold, silver, Bitcoin, crypto, you name it. It's all coming down. And that's because the market is now just like, yeah, we're headed for a recession. So we're not sure what assets we really want to be in. Let's just sit on cash and just wait and see how this plays out. That's the way the market's been all of late last year, and went into the next 3 to 6 months. I expect more of the same, to be honest. But anyway, guys, I'm gonna end the video right here. Please like and subscribe if you enjoyed the video, guys, and make sure that you keep investing out there, y'all. If you're in the market, not financial advice. Stay invested. Keep doing your thing. Don't let nobody tell you that you can't buy in a bear market. I do it all the time. And I'll see you guys in the next one. I'm out.